Hi traders, you're welcome back to the Forex Geek channel. In this video, we are diving into a powerful trading concept that can help you to spot market moves before they happen, and that is the volume trading system. So volume is one of the most underrated yet critical components of market analysis. So understanding how to read volume spikes, trends, and momentum can give you a serious edge in your trading. In this video, I'm just going to be breaking down how the volume trading system works, how to read volume to confirm trends and reversals, the best volume-based indicators for accurate trade setups, and of course, just a couple of examples so you can see how to make use of this strategy. Now, by the end of this video, you should have the knowledge to use volume effectively in your trading strategy. But before we jump in, make sure to smash that like button, subscribe to the channel, and turn on notifications so you don't miss out on more trading insights. Okay, now let us get started. Okay, we're going to be starting with the basics. What exactly is the volume trading system? Now, it is a method of analyzing price movements using trading volume as a confirmation tool. So instead of relying solely on price action, traders look at volume to determine if a move is backed by real strength or if it is just a weak fluctuation. When volume is increasing, it means there is strong participation in the market, which often leads to bigger and more sustained price moves. On the other hand, low volume movements can signal fake breakouts or weak trends that are likely to fail. So by using the volume trading system, you can identify breakouts with real momentum, you can confirm trends and reversals, you can filter out false signals to avoid bad trades. So now that we know why volume is important, let us just talk about how to use it properly in trading. Okay, to make the most out of the volume trading system, you need to understand how to interpret volume changes. All right, let me just be explaining with this. All right, so you should pay attention to volume spikes. Okay, a sudden increase in volume signals the start of a major move. All right, can you see what happened here? Can you see that? I think this was the first spike we had when this sell trend was about to start. You can see the spike in volume that indicated a major move, and guess what? We had a significant decline. Now, it doesn't mean that after you have the first spike, then the next volumes are just going to be completely low throughout. Yeah, there were periods where we had low volume, but you can see that the spike kept on coming, showing that there was still significant bearish momentum. You can see there was a spike here, there was a spike here, there was a spike here, there was, well, kind of a spike here, and then we had some lower spikes along the line. So it shows that there was significant bearish momentum in this bearish trend. Okay, so if price is moving up and volume is also increasing, it suggests a strong trend continuation. If price is rising, if price is that's for the case of a bullish trend, but if price is declining and you see that volume is increasing, it also shows that there is a strong bearish trend. Okay, but if price is rising and volume is decreasing, or maybe price is dropping and volume is also decreasing, it indicates that there is a weak trend. For the case of a buy trend, when price is rising and volume is decreasing, it shows that, like what we can see happen here. You can see that the price was rising. There was an initial spike in volume, but at some point the volume started declining continuously. So it shows that the rally was getting weak and there could be a reversal soon. So that is exactly what happened. We had a reversal, right? Now, in the case of a sell, if price is dropping and then suddenly you notice that the volume has started decreasing, and that is what is happening now. You can see the volume is actually decreasing. There is a possibility of a bullish reversal happening in such a scenario. Okay, you can also watch out for volume divergence. If price is making new highs or lows, but volume is not supporting the move, it's a warning sign that the trend could be losing strength. So using these principles, traders can avoid false breakouts and only enter trades when the market shows real conviction. Now, to make volume analysis even easier, there are several, powerful indicators that can help you track volume trends effectively. Okay, the first is the unbalanced volume. This is quite a popular volume based indicator. All right, this indicator measures buying and selling pressure based on volume flow. That is the OBV, measures buying and selling pressure based on volume flow. So if the OBV is rising, if the OBV is rising, it confirms strong buying interest, right? Like what we can see happen here. When the OBV was rising, you can see it confirms strong buying interest. Now, the next indicator we're going to be looking at is the VWAP, right? The volume weighted average price, the VWAP. Okay, it has been added to the chart. Now, this is a key indicator for institutional traders. It helps determine if price is trading above or below the fair value based on volume. So be watching the position of the candles, the position of price with respect to the VWAP. Okay, you watch out for the slope of the VWAP, and you watch out for price being above or below the VWAP. Now, let us also look at the accumulation distribution line. Okay, let's talk about accumulation distribution. So this helps detect whether money is flowing into or out of an asset, confirming the strength of a trend. So this is also an important indicator to use for volume-based trading style. All right, and then we also have volume moving averages. Okay, it's a simple way to smooth out volume fluctuations and identify long-term trends in trading activity. So these indicators work best when combined with support and resistance levels, trend lines, and price action strategies. Okay, and that is how you can use the volume trading system. You don't necessarily need to use all those indicators at the same time. You can actually use one of these volume based indicators at a time, or you can use two at a time and combine it with other technical indicators alongside price action, right? So you don't need to have your chart filled up with indicators. Just understand how important volume is in technical analysis, and just ensure that perhaps you have at least one volume based indicator that is complementing your strategy. Okay, and then pay attention to your trend lines, pay attention to support and resistance levels. They are very, very important, okay, for your trading analysis, your technical analysis. Okay, so volume is an essential tool that can help you identify strong trends, confirm breakouts, and avoid false signals. So if you start integrating volume into your trading, you'll have a clearer picture of market strength and make better informed decisions. If you found this video helpful, hit that like button and let me know in the comments, how do you use volume in your trading? And do not forget to subscribe and turn on notifications, because we've got even more powerful Forex strategies, tutorials, and breakdowns coming your way. Until next time, trade smart, stay disciplined, and I will see you in the next video.